Hello there. Welcome back to Financial Accounting 86. In this video, we're going to look at a question from November 2023. There's question 3 on that question paper, and this is a calculation of VAT, and VAT being value added tax. On the first question, on the question that we want to look at, it's 3.2. So we are specifically going to look at 3.2, and it reads calculate the amount payable to SARS in respect of VAT for the 2 months ended 30 April 2022. And then on the information part, part A, balance due to SARS on 1 April 2022, 9,450. So the key word that we have there is due to. It means is the business that is owing SARS money. So this is the balance that we are going to start with on the calculation of that amount payable to SARS. So on the next page, we have a continuation of information that we are given there. So if you come on information B, transactions for April 2021, we are given a column for amount excluding VAT, VAT amount, and then amount including VAT. Then we have got information that is there. So this is the information that we have. So we have to calculate the amount payable. So the easiest way is to prepare a VAT control account. We have to prepare a VAT control account. So if you come to the answer section, you'd see that we have got a VAT control account that is there. And then we are going to start with the balance that we have at the beginning of the question. So this is a VAT control. So basically we've got VAT output being on the credit side, VAT output, and then we have VAT input on the debit side. So this is what we have. So it's a matter of just understanding what we mean by VAT output, what we mean by VAT input. So VAT output is when we are selling goods as a business, or we are receiving money as a business. Whenever we are receiving money as a business, the component of VAT inside that total amount of VAT inclusive is VAT output. Then VAT input is when we are purchasing goods. So basically, when money is going out of the business, when we are purchasing, that's when we are going to have VAT input. So basically, elements that we can put under VAT input, we've got purchases, and also when we are making sales returns, with sales returns, we also classify it under VAT input. So we also have the issues of discount. So you just analyze the movement of the money. If the money is going out, like on discount allowed, it means we are giving a discount to our customer. So it's us who is giving out the money. So money is going out, so we put it under VAT input. Then a VAT output, when we are receiving money, like we are selling goods, so we have got sales under VAT output. So when also purchase returns, when we make returns on our purchases, we also classify it as VAT output. So those are some of the elements that we can include under VAT output and input. So basically, we can present it also in the form of a formula, whereby we are saying VAT output minus VAT input. So when it's a positive, it means the answer that we get is a balance that is payable to SARS. So we can just maybe try to present it in the form of formula, whereby we say amount payable, it is equal to VAT output, and then we subtract VAT input. So in this sense now, when we get a positive figure, it means it's amount payable to SARS, payable to SARS. And then it's a negative, it means amount payable by SARS, which means in this scenario, the second scenario here, it means SARS has to pay us the balance. So this is what we have in terms of calculation of VAT. So it depends with what you consider easy for you. If you want to start with VAT input, if you do the reverse saying VAT input minus VAT output, it means you just interpret it in the opposite way. That is, if you get a negative, it means it's the amount payable to SARS. And then the opposite is true. So let's go back and try to see the opening balance that you are given there. So if you come back here at the beginning of the question, if you come at the beginning of the question, let's try to see. Remember, this is the figure that we have at the beginning. It's amount due to SARS. So when it's due to SARS, it means it's going to start on the credit side of the VAT control. So we go there. We go there and put it as it is on the credit side of the VAT control. So we can just say this is amount payable, amount payable to SARS. And the figure that we have is 9,450. And then we can go to the table now to try to see the components of that table and adjust them there. At the beginning, we've got total sales, which is 412,000. And we have got a VAT amount is missing, but we are given the amount of including VAT, that is a VAT inclusive. So it means we need to find this component of VAT. But remember, VAT percentage currently South Africa is on 15%. So it means it's basically the formula that we are going to use is when you are given the amount excluding VAT, we are going to say 0.15, which is 15% times the amount excluding VAT. So then you get the VAT component. So in this case, we have got the amount excluding VAT, so you can easily get the VAT amount here. So we're going to say 0.15, and then we multiply by 412,000. So you calculate that, you calculate that. Let's try to see what you get there. Say 0.15 times 412. And then we're going to get 61,800. So it means here we've got 61,800. And remember, we said sales is under VAT output. So it's going to the credit side of that VAT control. So we can just go in there, and then we're going to say sales. And we've got 61,800. Then we go to the next one. So on the next one, we are given the amount excluding VAT again. And then we don't have the amount, the VAT component. So basically, we are just going to use the same approach by saying 0.15, which is 15%, and then you multiply by 230,000. Obviously, there you are supposed to get, let's try to see, 0.15, then you multiply by 230. Then you get 34,500. So here it means it's 34,500. Then this one is purchases. Remember, purchases we said they're under VAT input, so they go to the debit side. So we go there. And now we have your purchases on the debit side. And we've got 34,500. Then on the next element that we have on the table, we've got discount allowed to debtors. Discount allowed to debtors. Remember what we said? We said if we are having discounts check on the movement of money. When discount allowed, remember we are giving discount to our debtors. We are supposed to receive that money, but we are giving it back to our debtor. So it's a movement out. So when we have got a movement out, we put it under VAT input. So this 1,890, which is the VAT component, is going under VAT input. So we go to the debit side of the VAT control account, and we are going to say discount. We've got discount allowed, and it's 1,890. So we go back again to check on the next element. We have got goods returned by customers, and we are given the amount of including VAT, which is VAT inclusive, but we don't have the amount excluding VAT is not there. VAT amount again is not there. So what does it mean? It means when we are not given the VAT, the amount excluding VAT, it means we cannot use this formula of saying 0.15 times the amount excluding, because the amount of excluding is missing there. So what are we supposed to do? We can just use proportion there, whereby we are saying, let's just maybe make the representation on top of the table. The amount that we have excluding VAT represents 100%. Representation in terms of percentages. Then VAT amount is 15%. Then it means amount including VAT is 100% plus 15. and you get 115%. So this is the proportion that we have. So we can just make a proportion there. Remember, in this instance, we are given the amount including. So we are given the 115%. So we are saying in proportion wise, we are now saying 115 is equal to the amount that we have is 19,320. So the figure that we want is 15%. So obviously, is this the figure that we want? So basically, we can just use a simple formula there by saying what you don't have, we put it as a numerator. And then what you have, put it as a denominator in terms of this side. This side. Then the given figure, you multiply by the given figure, 19,320 over 1. So what you don't have there is 15. So 15 is the numerator. What we have is 115 denominator. Then you multiply by the given figure, which is 19,320. Then we calculate it as it is like that. Let's try to use our calculators there. So if you calculate correctly there, let's try to see. If you calculate it correctly, you're saying 15 divided by 115, and then the answer that you are going to get, you multiply by 19,320. Then you get 2,520. 2,520, and remember, we said it's going to be under input on the debit side, so we can go and put it on the debit side, 2,520. 2,520. So you got 2,520 is let's try to see what are we having there. What's the description? We'll just check there in terms of the description. This is goods returned by customers, so they are sales returns. They are sales returns. So we are going to put them on the debit side. Remember, sales are on the credit, so returns will come on the opposite side, on the debit side. So let's try to see on the answer section. We've got 2,520. So these are, we are just saying their sales. Their sales returns. So we go back to see the next one. So on the next one, we have bad debts recovered, but it's already the VAT component has been calculated 1,140. So it's a matter of deciding where are we supposed to put our bad debts recovered. So what happens on bad debts recovered is that these people or these customers would have sold them goods to them back, and then they were our debtors. They were owing us money. Then we came to a point of writing them off, which means we removed them in the book, in our books, saying we are not expecting any money from them due to many circumstances. Then they come back after we've written them off. They become bad debts recovered. It means we are now receiving money from them. So when you are receiving money from them, it means it's now the same. It's now the same process of like we are selling them. We are selling goods to them. So when we are receiving money, like what we explained before, we classify it under VAT output. So it means it's going to go to the credit side. So we go to the credit side and put it as bad debts recovered. Debts recovered. And the amount that we have there is 1,140. 1,140. And then we check if you've got another component that we have there or element under the table. Then after bad debts recovered, lastly, we've got drawings of trading stock by the owner. Drawings of trading stock by the owner. So like we said, just check the movement of the goods or money. So in this case, on drawings, what happens is the owner is taking goods for personal use. It means the goods are going out of the business. So they are going in the same direction of sales. It means they are going out. So we classify it under output again because they are going out. So the 1,380 that we have on VAT amount is going to go under the VAT output on the credit side. So we are going to put it on the credit side, 1,380. So we are saying drawings. We have 1,380. So this is what we have. So after entering these figures, then obviously you are now supposed to calculate the balance. So the balance that you are going to get there is going to reflect whether it's amount payable or amount payable to or amount payable by SARS. So we can just make our calculations. We are just balancing this account symbol. So we add the total of the credit and total of the debit, but if you add those two totals, you'd see that the credit is greater side with 73,770. So it means that is the total that is going to come between the double lines. So we have 73,770 to come both sides. Then you say this total minus 2,520 minus 1,890 minus 34,500, you're going to get a balance there, which is 34,860. Though this is so this is the amount. So when we have a balance, a CD that is on the debit like this, it's amount payable to SARS. So in simple terms, when the credit like this, credit side like this is greater than the debit, it means this VAT control, yes, let me just make a statement here. It means the VAT credit, if the credit is greater, if the credit side is greater, it means this VAT control has got a credit balance. If the credit side is greater, because we had a greater total on the credit side of 73,720. So the side that is a greater total is the balance of that account. So in this case, if the credit side is greater than the debit, the account has a credit balance. So this VAT control has got a credit balance. So in the case that you are asked that the VAT control with a credit balance, is it payable or payable? Is it payable to or payable by? It means it's payable to. So this is what we have in terms of the VAT control that we are supposed to prepare. So on the calculation of amount payable to, it means this is the amount that we have. So obviously you can present it in the form of a formula whereby you are saying you just start by the credit side because that's the greater side. By saying 9,450 plus 16,800 plus 1,140 plus 1,380 minus 34,500 minus 1,890 minus 2,520, then you get your 34,860. As simple as that. So this is what we have according to this video. Those of you who have subscribed, please subscribe and share. We are still coming with more videos. As for this video, I'm signing out.